Okay, hi Jeff, how are you? Welcome to the show.
I am doing great, Doug. Thanks for having me today.
Oh, my pleasure. Nice to have you with us. So, I'm looking at your bio. Would you call yourself a financial advisor? Is that your primary job?
Yeah, I think that's appropriate. I do comprehensive financial planning and investment management services. So yeah, the generic term I think would be financial advisor.
So, your clients would come to you and say, I have these goals in mind, blah, blah, blah. Do they give you their money to invest?
Yeah, well, so we're a comprehensive wealth management firm. So we do deep discovery around goals and meaning and purpose and kind of what matters most. And then from that construct a holistic wealth management plan, which would cover goals-based investments, cash flow planning, tax planning, estate planning. So it's really designed to be holistic coaching around a whole host of financial matters. And then we most likely will manage some or all of their financial resources. And so we do, yes, we manage assets as well.
A lot of people are doing this themselves now because of the ease of the internet, where you can trade stock, you can do everything by
That's right.
yourself. What's the biggest mistake you see people are making?
Well, you're absolutely right. I mean, the great thing about the last 50 years or so is it's become a lot easier with technology to manage your own finances. The problem I think many people run into is behavioral. I mean, most people make mistakes not because of intellect. I mean, most people are plenty smart enough to manage their own portfolios in a reasonable way. But the problem is human nature is a failed investor. And so what happens is we make a series of behavioral mistakes that are can be quite costly in terms of teetering between fear and greed. And these are mistakes that can wipe out years and years of savings without having a process in place to make sure that your investments are aligned with your goals, but more importantly, that you invest rationally instead of emotionally, and it's very difficult. One of the benefits of technology is these products have become much cheaper and easier to implement, but it's also encouraged a lot of trading, which can oftentimes be a mistake. So I think the behavioral aspects are some of the major issues in terms of doing it yourself. And of course, I mean, we live in a world today where I believe that it may be more difficult in the future than it's been in the past to reach our financial goals. So there's certain things that we have to think about maybe differently than we did in the last 10 or 15 years.
Well, I don't think the stock market behaves the way it used to traditionally. I see a much more volatile market, and I think a lot of people, like you said, are trading. I think a lot of people are day trading, which I don't know that I would recommend that for people who are looking for long term goals. You had mentioned emotional reaction, the fear of missing out, right?
Right.
Is
That's right.
one.
FOMO. Yeah.
FOMO. Yeah,
Right.
exactly. So I don't know, how viable do you think the stock market is these days?
Well, I think that being a shareholder in the world's great businesses has proven and is likely to prove a terrific way to preserve wealth and to grow wealth. I mean, to be a shareholder in the great enterprises of the world. And that's what you are when you own stocks, you own companies. And when people trade actively, as you discussed, day trading, they've turned what I believe is a high probability outcome endeavor into a casino because over time, owners profit from obviously the success of the enterprise. And so I am a big believer in owning a share of global growth, and that's what you own when you own great businesses. So, but again, because of the ease of trading and the information, and now no cost to trade ETFs or mutual funds, it's encouraged gambling and it's encouraged speculation. And so day trading or actively trying to buy something in hopes that it goes up tomorrow is really not investing, it's speculating. But in terms of capturing global growth, being a shareholder in the world's great businesses, I believe, is a terrific and wise thing to do. And the reason I'm passionate about it is because growth in global equities and being a shareholder in the world's great businesses, I believe it's organic. I mean, it's people getting up every day trying to live better tomorrow than they live today, or have their children live better than they lived. And so they're going to work and they're getting educated and they're buying products and services to make their lives better. And that's a phenomenon all over the globe. And the capital markets are really there just to create products and services to serve those individuals. And that's why I believe that if you can be a shareholder in the world's great businesses, you've got a reasonable chance of participating in this global growth. So I'm a big believer that being a shareholder in the world's great businesses is probably the best way to preserve purchasing power, which is really what it's about today. And of course, it's always been, but it's more relevant today as we've had higher than normal inflation recently. Purchasing power, it's not about just getting units, getting dollars. It's getting dollars that can keep pace with rising prices.
So you think that buy and hold is still viable?
Well, I mean, I think buy and hold, but you do have to pay attention and you have to rebalance and tax loss harvest and make sure you own enough of a broad set of securities so that you don't get killed if anyone has a bad outcome. So, I wouldn't buy and forget, but I do believe I call it strategic asset allocation, so that you're not trying to predict the future. Warren Buffett is the greatest investor in public securities, I guess, in our lifetime that we're all familiar with, at least. There may be some others that we don't know as much about. And he professes no ability to time markets. And so if the greatest investor in public securities in my life, at least, professes no ability to time it, it'd be pretty foolish, I think, for me or most investors. So, yeah, strategic asset allocation, which buy and hold generally is the idea.
Well, and he can lose billions of dollars in one afternoon, and he'll still be all right. Most of us can't do that.
Well, the difference, though, is, I think we can do it in some respects, because when his portfolio value goes down billions, he doesn't lose anything because he didn't sell it. He still owns the businesses. And so I think you and I are in the exact same place. So if we own, I'm here in Atlanta, so Coca-Cola is obviously a popular name here in Atlanta. And if the value of my Coke stock goes down, it's true that if I want to sell it, the value of my shares are worth less. But the enterprise probably didn't go down as much. The company still has the same products, the same services, the same intellectual capital, the same people. So really, it's me selling that causes the loss. It's not the volatility. So I think for many of us, if we can expand our time horizon, investors create losses more than markets do. If you look at broadly diversified portfolios over a 20-year period, there's never been a 20-year period with dividends reinvested where you would have lost money had you been in a broad market. But investors lose money because they sell when it's down.
Panic selling.
Correct. Correct.
Okay, well, that's a good point. Let's pivot over to your book. So you've got a book out called The Money and Meaning Journey, and what was the rest of it?
Yeah, a guide to clarity, financial confidence, and joy.
Okay. And you wrote the book when?
Oh, it was just released in October of 2022, so last month.
All right.
Late last month, the book was released.
Now, why did you decide to write this book?
I've had many of the concepts of this book in my head and my heart for 20-something years. I've been advising clients for 36 years, and parts of the book I've been thinking about for years and years. But in 2013, I went through an experience called the Halftime Institute, where I was approaching my 50th birthday, and I was sort of thinking about, what do I want to do in the second half of my life? so to speak. And I was exposed to the idea that many of us reach, quote, midlife, mid to late career of our careers, and have had success. We've gotten married and we had children and we may have started businesses or had career success. And we reach a point where we have everything we thought we wanted, but we're still not fulfilled. And so I realized that many of the people that I was serving was in this same place. And I wanted to write a book that went through the experience I went through and really just going deeper about what really matters, what makes my heart come alive, what is my true purpose, what is my why, what really matters, and marry that with wealth management. So it's about how to create clarity about what really matters, but then how do you implement a wealth management plan that helps you create the margin to be able to go pursue it. So the problem I find occasionally is that people have means, but they have no meaning. So they've got money and they've got resources, and what they end up doing is they spend all day watching CNBC or watching politics or trying to control markets, as we just mentioned, when they should be in the best years of their life. I mean, the second half can be the best half. So I wrote the book because I wanted individuals to take a pause at mid to late career and get really strategic about what matters, and then recognize that the wealth management process to create the margin, the financial margin at least, was not near as complicated as my industry wants you to think it is, perhaps, and that you can do it. I mean, you can do it. So that was really the idea behind the book, is just years of coaching clients. And I will tell you one quick story I tell in the book is in 2003, my mom had cancer surgery, unsuccessful ultimately. The cancer took her life. But that day, my dad told me that one of the 3 worst days of his life was the day he retired. And he'd been retired a few years. And I just said, man, that's really, really sad. I want to try to help people make retirement the best day of their life by having something to go to. So it's not just about the money, it's the money and the meaning. And that's the idea behind the book.
How has the reception been to the book? You said it's been out about a month now, right? Are you getting some good reviews on it?
Yeah, and it's interesting. I had pretty low expectations in writing the book. I mean, I wrote the book as much for me to get some things out that were in my head that I just wanted to get out in the world. And so, the publisher asked me, and they weren't probably happy with this answer. They said, "What are your goals for the book?" I said, "Well, I'd love for the book to help at least one person, and I would love to be proud of the book." And so I'm getting really good feedback from the people that have read it, and I feel good about the product that I've put out. I've learned a lot. I mean, this is my first book, and I've learned a lot about the publishing industry and the process. The writing was a lot of fun. I did it. It took 2 years to do it because I did it while I was running my wealth management practice. So every Friday for 2 years, I worked on the book. But it's been very positive so far. I've been gratified. And some people that I really respect in the industry, I shared it with them, and they were very supportive of both the technical wealth management side of the book, as well as some of the hard issues that I talk about. But the book is really designed to be an easy read, so it doesn't get really technical in the wealth management. And I guess I was a little bit optimistic about all that I could share. So I go pretty shallow in a lot of areas, but encourage the reader with a number of resources where they can go get more if they want to go deeper in, again, both halves of the book, both the meaning and purpose and spiritual side of the book, as well as the technical wealth management side.
Well, Jeff, we got to wind this down. We have run out of time. Thanks so much for coming on. Do you have a website that you want to give out?
Yeah, the best place to go is jeffbernierauthor.com. So Jeff Bernier, Bernier, author.com is a website we created for the book and speaking engagements. And if you buy the book, there's some additional bonus material there that I think is really valuable. The middle part of the book is a workshop, and some of the bonus material gives you the workbook where you can work through some of the exercises in the book. And you can reach out to me if you'd like to reach out to me at hello@jeffbernierauthor.com.
Okay, great. Thanks so much for coming on and sharing, and best of luck with your book and with your company. I hope everything goes well for you.
Well, thank you so much, Doug. It was a pleasure being with you.